going to that. Let's get more insight on the challenges, of course, facing the Fed with Douglas Holtz-Eakin, president of the American Action Forum. He is also the former director of the Congressional Budget Office and a former chief economist of the President's Council of Economic Advisors. Douglas, can you hint on that point? I mean, we do really want to try to preserve the independence of a Federal Reserve, but do they think about sort of the impacts of rising rates and sort of the costs as well when we're already taking a look, and I know still historically very low levels, but a 10-year yield creeping up to about a 230.
I think there are a couple of things to keep in mind. Number one, the primary objective for the Fed should be to tame inflation. As Chair Powell emphasized so many times today, that is the best route to a sustained long-run growth in employment, and that's an objective everyone shares. So that's going to be their focus, and if it imposes some fiscal costs, that's part of the price of getting inflation under control. The second issue is that we have very big deficits because of the emergency responses, but those are all temporary responses, and they will roll off, and indeed have already begun to, and we will return to essentially the pre-pandemic problem of the fact that the federal budget is large and widening as far as the eye can see, and Congress will have to deal with that at some point, no question. And then number three, in the CBO projections, they already anticipate that interest rates will rise. So it would have to be interest rate rises well beyond those expected increases to cause a real problem. And that just doesn't seem to be, the arithmetic that's in the cards. So this will be manageable, but it does mean that Congress has a job to do, fix the deficit, and do it for the right reasons, which is better economic performance and supporting the people who need a social safety net.
Let's dig into that deficit a little bit, if you don't mind, and kind of talk about the dynamics of the deficit and how Congress can fix the deficit. I think we're looking at something like 9% of GDP is the current federal budget deficit. It's around where it was at its peak in terms of size after the last cycle. As we see some of those support payments roll off, where do you see that deficit headed, and how can Congress act to contain the deficit going forward?
Well, I see the deficit coming down to 4 or 5% of GDP as it was in 2018-19. Those were $1 trillion deficits as far as the eye could see, and that wasn't a good news story. It got shadowed by everything else, but that was an underlying problem. And I think the important thing to recognize is you hear all the time people say, oh, we can manage it. That managing it means that you're getting through, but that's different from actually succeeding what you'd like to accomplish. It's like getting a D and passing the class. I think we should do better than just manage it. Underneath those deficits are very important programs. Medicare, in the next 4 years, will see the hospital trust fund bankrupt. That needs to be dealt with as a matter of the policy toward our seniors. It needs to be dealt with as a financial matter for the federal budget. And it has to be dealt with because of the economic consequences of having to take productive dollars out of the private sector to support these programs on an ever-increasing scale. That's undercutting long-term growth. That's undercutting the standard of living. Congress needs to get on that. Now, we have Medicare, we have a highway trust fund, we have a disability trust fund, we have Social Security, the biggest social safety net program, our best anti-poverty effort, all of which have pressing financial problems. Congress needs to get on this and get on it quickly.
But there's the political issue, Douglas, that inflation is running hot, and how can you spend more at that particular time? Do you think it's realistic that we continue to see some sort of fiscal impulse at this time, which an economy might be slowing and well might need when you see a lot of the urgent spending that you were just talking of?
I don't think that we are in need of a fiscal impulse at this time. I mean, it's time to hand off growth to the private sector. As Chairman Powell said repeatedly, this economy is very strong. The labor market has 1.7 million job openings for everyone who's looking for work. And, we have all sorts of indicators of strength. So this isn't a time where we need a fiscal impulse. And how you close the deficit does matter. There are some who say, oh, I'm a fiscal conservative because I want to spend another $1 trillion, but I'm going to raise taxes by $1.5 trillion and close the deficit. That might be arithmetically fiscal conservative, but that's not going to produce growth.
Yeah.
If you want to cut $500 million and genuinely reduce the footprint of the federal government, then you're going to get better growth.
Really appreciate it. Douglas Holtz-Eakin, president of the American Action Forum. Need more time with you next time. Coming up, it is our final take. This is Bloomberg.